Hi guys, welcome to our webinar. This is CLIQ company and my name is Olga. Today we're going to talk about a revolutionary trading idea which works with any product that you're trading, in any markets and in any time frame, with any currency pairs and so on and so on. We're going to talk about basic concepts of the trading, about support or resistance levels, support or resistance trend lines. And for most traders or novice traders, I know this subject is rather complicated, so we will talk in details to avoid common mistakes. I will remind you that our webinar is interactive, so you can ask your questions and you can leave your comments. We will answer them within our webinar. So let's go. Let's start from the basic concept, support and resistance. What does it mean? Actually, support is nothing but a level or a zone where there are more buyers than the sellers. And the price actually tends to rise. And resistance, it's also a zone or a level where there are more sellers than the buyers, thus resulting in a drop in a price. If we are talking about, for example, support line, which we're going to draw or learn how to draw in the correct way, so it can be regarded as the floor, preventing the market from moving prices downwards. And resistance lines tends to be as a ceiling, which actually prevents the market from moving the prices upward. And if you can define, recognize, draw support or resistance lines and levels and trend lines, actually you will receive a very good opportunity for buy or sell order, because in these areas market participants start to push the price upward or downward. So it's going to be the concentration, very strong impulse for buying or selling opportunity. And let's talk about some myths about how to draw trend levels, support resistance levels and lines. So the first myth says that you should draw every support or resistance level that you can find in your charts, and actually it will lead you into a trap. And in the end, you will receive this messy chart with lots of tools and lines, and you don't know what you're gonna do with all this stuff. Actually, what you need to do is to draw on the significant levels, which you can find on the high time frame with the strong prices. We'll come to that. We'll go to that point. The second myth that says that you should draw your support resistance trend line exactly on the highs and lows of the candles. But actually, just imagine, it's more a zone than a simple line or single line. And that's why sometimes it must be drawn across the tails or shadows, and sometimes across the bodies of the candles, forming a zone, not a single line. And there is a third myth that says that also you need to go deep down in the history and also find all the levels that you can see and recognize. Actually, what you need to do is go to a higher time frame and check out for the strong prices. And talking about levels of support and resistance, we can divide them into two big categories. So first, they are horizontal support and resistance levels, and second is slope, it looks like this, or trend support and resistance levels. You need actually to draw a horizontal trend line. Support or resistance doesn't matter, only one price. Extremum or strong price, or high or low, maximum, minimum, you can call it, you can give it lots of names, but the point is only one price is necessary for you. To draw actually a slope trend line, you need, or just trend line, you need two prices, at least two maximums or two minimums, to swing lows or to swing highs. This is the main rule. Next, horizontal levels can be divided into some categories or groups. We are going to talk about two, the most important maybe, according to their formation. So the first group is formed with the help of extremums or peaks or highs or lows of the market. These strong prices, the definitely strong prices, prevent a market from pushing price upward or downward. And actually, there is a zone where the market price actually opposing or sometimes stops, was not able to move for certain days, forming strong levels. And these levels become to be seen by most of the traders and used by them for buying or selling opportunity in the end. And slope lines, or this is about horizontal lines, and trend lines or slope lines are formed also with the help of, actually, give me a second please, I think I forgot to tell you. Yes, sorry guys. Let's come back to horizontal levels. So first group, I told you that it's formed with the help of extremums, but there is a second group which is formed with the help of so-called round numbers. And this is actually has nothing to do with the technical analysis, absolutely psychological fact. Most traders tend to buy or sell on the prices, on the levels when the price is a whole number or contains some zeros. So the strongest round price is which has 4 zeros in the end, and according to these 3, 2, 1. And actually you can imagine that a lot of in the end a lot of target orders, stop losses, pending orders set by or plotted by traders or big players are placed at these levels. They're called psychological, and rather than the others. And this big amount of orders actually form a very strong price barrier, which actually market is unable to push down or upward. And that's why, and this is how psychological levels appear. Next, it's support or resistance trend lines. They're formed with the help of also strong prices, of course. The only difference is the market is trending. It's going upwards or downwards. And we call these highs and lows, swing high, swing low. They're also strong prices. They also prevent the price from moving upward or downward, but in trending position. So actually, only having trend line analysis, only maybe having it as a tool, your trend line, your support or resistance trend line, and we will mostly talk about trend lines today, and also a pattern that we are going to give you in the end, 1, 2, 3 pattern, we call it like that. You will be able to find any opportunity, buy or sell. And actually we are going to give you a very revolutionary pattern formation. I told you that it's called 1, 2, 3, and it looks this way. Actually having only trend line analysis and this pattern, you can do everything with the market. You can find everything that you need. All your trading decision, all the elements of your trading decision can be made only with these two. Trend line and this pattern. So it looks like that. We are going to actually find upward tendency. We're going to look for the upward tendency. That's why we go to a higher time frame, find the upward tendency, and come back to the shorter term time frames that you prefer for trading. If you are scalping, you go to your scalping, your favorite maybe shorter term time frame. Intraday is gonna be 30, H4 or whatever. And the only rule is at least one step higher time frame. You need to check the prevailing tendency, and you need to choose upward tendency. We are going to trade with the trend. We remember this rule. Yes, trend is your friend. And we are going to look for the reversal pattern. So this pattern starts from very significant high and downward movement. So the market moves down, forming the position 1. Then it goes back, forming the position 2. Then it goes or pulls back down, forming the position 3. Market can go all the way to number 1, or just half of the way, or just part of the way. It's not relevant. the only condition is number 3 must not be lower than number 2. Higher, yes. At the same level, yes. Then we expect that the market delivers a breakout, bullish breakout or upward breakout, and comes back to the previous direction, previous prevailing tendency, upward tendency. This crossover of the market and one element that we add to this pattern, which is trend line. In our case, it's actually resistance trend line, falling trend line. This crossover gives us buy opportunity, the best timing for entering the markets. Trust me, the best one, the earliest. How do we calculate it? Actually, we need to set a pending order, because we are going to calculate what is the price in the time of crossing, and give 5 pips to the market, and only there we set our pending order. It depends on the current price, so you're gonna actually set up a buy stop or buy limits. It depends where the price now, lower or higher than this crossover. So you set up buy limit or buy stop 5 pips higher than the crossover. And then you set your stop loss and take profit. How much is your take profit? Actually, it's the distance between position number 1 and number 2. How much is your stop loss? It's half of this position, half of this quantity of pips. How it works in the markets. We are going to give you examples on basic currency pairs, but actually this is a revolutionary trading idea that actually works in any time frame and with any currency pair. So we checked, for example, we are trading H4. We checked on daily, the prevailing tendency was upward. We come back to H4 and we are waiting for the downward movement and significant high. So we saw the market gave us position 1. Very good, this is low. Next it goes up, gives us position 2 by forming a lower high, second lower high. Then it pulls back to position number 3. It's higher than number 1, so the condition is done. Then we are waiting for the breakout. It happened. How do we see it? We draw the trend line. And we know the rule that we need at least 2 maximums or 2 minimums. In our case, it's 2 maximums. So we take our starting point, our first high, and lower high position number 2. We draw the trend line, we stretch it. We wait until the market crosses this trend line. And we set, for example, if we are higher, buy stop. If we are lower, if the current price is lower, buy limits. 5 pips higher than the crossover. So we calculate. Take your cross and calculate. So the current price, for example, on the cross is 1.1201. So plus 5 pips is going to be here. Your take profit is going to be, let's see. So we measure how many pips are here between 1 and 2. It's about actually 71. So we set it on 71. And half of that quantity of pips, it's 35 or 36, whatever, it's your stop loss. There is no stop loss here, it's over there on this level. And we took our actually profit on the very next candle. H4, the same currency pair. We wait until the market goes down, forming the position 1, goes back, forming position 2, rather lower high. Pulls back, giving us position 3. 3 is higher than 1. Perfect. Then we wait, then we draw the trend line and we wait for the breakouts. So the market breaks above the trend line, we calculate the price, give 5 pips and open our pending order as buy limit or buy stop. And we measure how much is our profit. It's about 82 or 83 pips, so we set it over here. We took it actually before the market starts to reverse, risky but still. And half of that price is going to be our stop loss. You see, the stop loss will be would have been here, but we closed our position earlier. Great Britain pound, US dollar. We trade H1, that's why we go to H4 and check our prevailing tendencies upward. So we are trading actually on the reversal pattern. This 1, 2, 3, it's a brilliant reversal pattern. So we wait, here is the example. We wait for the downward movement, position 1, position 2, position 3, breakout. We set our pending order. We calculate how much is our profit. 45, 47, 45, 23, it's our stop loss on that level. You see the perfect market situation. And the last example, also the same currency pair, downward movement, very significant high, a very significant low, gave us a lot of profit, if I'm not mistaken. But actually it's bigger, but it's a lower time frame. It's like 62. 66, 67, 66. Okay, look, this is our number 3 position. It's much higher than 1. This is our trend line. We stretch it and we wait for it. Very risky situation, actually. Very long shadow or tail, but the setup is brilliant, actually, because we have take profit 66 pips, so our stop loss is gonna be 33. Measure it. Somewhere here, and our tail was 23 only, so no stop loss here, but it looks like stop loss from the first side, really. But nevertheless, this brilliant idea works very well. So this is how it works, this is how you're supposed to use it. And I will remind you the rules. First, you need to check the prevailing tendency with the high time frame. Come back to your shorter term time frame, set up 1 to 3 position, draw a trend line, and wait until the breakout happens. And then you set up your take profit and your stop loss. And in the end, you're going to receive your profit. We have given you a brilliant tool, actually, which works with nothing more than trend line and 1 to 3 pattern. Please use it. Use it in your trading. I wish you the best of luck. I wish you the happy trading. I wish you high profits. And trust me, we have a lot to share with you. So if you have some question, you can ask them. We'll answer. If you want to see us, you can come to our office. You can consult our live support, and actually everything you need to do is take all our useful information and put it into practice. Again, I wish you the best of luck, high profits. Thank you very much for your attention, for your comments, for your questions. We appreciate it a lot. See you soon on our next and following webinars. Bye-bye.